the weekend, three Adani Group companies announced to the stock exchanges that they have created additional pledges of their shares in favor of SBICAP, which is a trustee company. The three companies were Adani Ports, Adani Transmission and Adani Green. The pledges were intended to top up collateral for a loan to State Bank of India. To understand more on this, we are joined by Mr. J. Swaminathan, Managing Director, State Bank of India. Mr. Swaminathan, good morning. Thank you very much for your time. If you can tell us any details about what is the total amount of loans involved, how much did the collateral fall short?
Thank you, Lata, for having me here. As you mentioned, of course, this was a top-up that was required for maintaining a collateral security coverage. As we had disclosed earlier, we have an exposure of US dollar 300 million facility that was granted for the Adani Group's Carmichael facility in Australia, of which they have drawn down USD 180 million towards the railroad part of the project, while the mines they have so far managed to complete with their own resources. So there is one of the covenants for this facility is that they should maintain 140% collateral coverage. In addition to the project assets, they are required to maintain this collateral coverage by way of pledge of shares from the three companies belonging to the group that you mentioned now, the Green, Ports and Adani Transmission. So every month end, we have a system by which this covenant is reviewed, and any shortfall that occurs on account of movement in the value of these stocks, the number of shares are required to be topped up to ensure an all-time coverage of 140%. So this is an activity that we do every month, and we have been doing it ever since this facility was extended sometime in May 2022. And twice it had happened in the past, in June and July. And the third one happened on 8th of February. That was what was disclosed by the SBICAP Trustee. And the number of shares pledged, etc., is already in the public domain. So I will not go into the details, but it was additional share requirement. In all, as we clarified, it amounts to about 1.06% in the equity of Adani Green, and about 1% on Adani Ports, and about 0.55 on Adani Transmission, which in our view is a very small portion, and to cover the facility by way of additional collateral coverage. I hope that clarifies.
Yes, fair point, sir. Mr. Swaminathan, that's clear. Yeah, go ahead.
Yeah, just to add on that, as it was clarified again, this is not any loans that was granted against pledge of shares. No additional finance was granted against this additional pledge. These are essentially to maintain a covenant that is pre-existing in terms of an earlier facility, which is completely covered both by project assets as well as this collateral coverage. Thank you.
Yeah, that's very clear, sir. It was important that this is not a new loan, which SBI sources told us over the weekend itself. It's not a new loan. It's not a new pledge. It was additional topping up collateral for an existing pledge. Mr. Swaminathan, you know, earlier the understanding of the market, I assumed, was that most of the Indian lenders were giving loans for existing projects which were generating cash. Do you have more such loans which have been given on the basis of pledged shares?
Yeah, two things, two parts I would like to respond. Number one, incidentally, this project is already operational. The Carmichael project in Australia is already operational. It's not a project under implementation. The project is already operational and generating cash. Number one. And number two is in terms of pledge of shares, wherever it has been taken by lenders by us, they have always been stipulated as part of the collateral coverage, which is over and above the project assets that are securing the credit facilities that are extended. There is no finance extended towards pledge of these shares. So that does not exist in our books. So I hope both are clear.
Oh, that's very important. What you're saying is that there is no loan at all given exclusively on a share pledge. These were only additional collaterals taken, and most of the loans were given for actual cash flows, cash flow generating projects.
Absolutely, you're right.
Okay. Is there any proportion you can say what part of your loan, the chairman said on the day of the results that it is 0.9% of the outstanding book of State Bank of India. What would that work out to? About 25,000 crores? What part of the loan may be, propped by shares, you think, if you can give a percentage like that?
Yeah, no, the first part of your question, what the 0.88% translates to, is a simple arithmetic, because our book, as at the end of December, was 31.5 lakh crore is our total advances. So 0.88% translates to something like figures little lower than 27,000 crore. I think that's already in the public domain.
Yes.
And that is well below the large exposure framework that is permitted by RBI. And that covers both fund-based and non-fund-based outstandings pertaining to this group. So that's the exposure part of it in terms of both percentage and number. And as regards how much portion of this is secured by collateral security of shares, I don't have a ready number, but I can clarify that it's a very, very minuscule portion. Wherever in certain assets, an additional collateral is stipulated. Typically, as you would know, when a project is under implementation, we would like to have certain additional collateral in addition to the project assets. So this sort of mostly interim arrangement, and the portion that taken as collateral security by lenders like us is very, very minimal, very minuscule. I don't think it will be anything very significant.
Okay. Is there any other conversation with any of the group companies in terms of asking for collateral or in terms of negotiating for another loan?
None so far. As of now, no situation has arisen for any of this, because see, all our exposures are secured by mostly operating assets which are generating adequate cash. The EBITDA that's being generated by the group companies are more than adequate to service the loans. So interest and principal, whatever that has been falling due so far, is being serviced, and even in our review, over the next 12 to 18 months, as we are in a position to see at this point in time, we don't see any challenge in terms of servicing any of the loans. So there's been no occasion for us to have any discussion with the group in terms of its serviceability. But I think they are also making adequate disclosures from that side in terms of what are their plans, in terms of how do they plan to finance and how do they plan to repay or prepay, etc. I think we will rather be guided by the commentary that the company provides from the lender's perspective. As Chairman clarified that day, there are no concerns at this point in time. And anyway, all the large exposures are reviewed on a regular basis by the board. And if there are anything that requires our attention, warrants a discussion with the company, we'll certainly be taking it up. But at this point in time, there has been no such occasion.
Well, the group is executing a large number of projects in the country. Some of them would be under construction. So are there projects where you have given loans, to projects which are still not generating cash?
Yeah, that is true.
What proportion would that be?
Yeah. The large group like this will always have some projects that are in pipeline. But two things that we should remember. Number one is that for each one of the project, groups like this will first achieve a financial closure, without which they don't proceed. So there are no projects that are awaiting a financial closure, which means that the funds for the projects have been tied up either by way of equity or by way of loans or the market instruments that may come up. So obviously the projects that are under implementation are all where the financial closure has been achieved. Number one. Number two, group as a whole has got adequate strength and surplus cash flow. So in case if there are any requirement towards any one of the projects, we are confident that groups like this ensure that group level support, the parent level support is also available in case if any of the projects that require additional funding or if there are any delays in the cash flow generation. Third, at this point in time, whatever projects that are under implementation that have been financed by us, we again have a routine review on a monthly basis. We have not observed any delay or any difficulty in completing those projects on time. So there are no concerns at this point in time in terms of projects that are in implementation.
Okay, that perhaps satisfies all questions. Just a final last one. There are projects that are yet to start, like for instance, the Navi Mumbai Airport. I would assume they would have approached State Bank of India for such loans, such projects as well. Will there be a rethink on the part of the bank in terms of proceeding with more exposures?
This is kind of very conjuncture, kind of hypothetical answer only we can provide, because typically, as you would know, not only at this time, any time a request for a loan is always a matter of discussion between the bankers and the lenders, and then from time to time a credit call will be taken basis the circumstances that prevail at that point in time. As I mentioned earlier, at this point in time, as we speak, there are no concerns, so there has been no change in our approach. But we will keep watching the situation, and if there are anything that require any steps to be taken from our side, we will act accordingly. The second is that any new projects, probably the group also may be working on their own plans in terms of how to take it forward. And again, I would rather wait for their commentary to be said about the projects that are yet to commence or fairly at an initial stage. I think the company would be in a better position to clarify to us than us at this point.
Okay, so just one more thing. You know, some of the loans which are extended by global banks, we understand the bulk of them are going to come up for refinancing in 2024. But we were told that a portion of 745 million comes for refinancing this year itself, 23. If they approached you, have they approached you, and would you be interested in refinancing that loan?
Yeah, the party response is no, they haven't approached us. There have been no discussions, as I mentioned, in terms of any additional finance that they may require or a refinance that may require. So it will be difficult for me to respond at this point in time as to whether what could be our response. So if and when a proposal of that nature comes up, I'm sure that we will have time to discuss that with the company and take a view in that matter. The second, again, I would like to draw your attention to the company's statement so far, that as far as this refinancing is concerned, they've said that they have their plans in place, and even some of the market borrowings that they were planning to do in the month of March, they have decided not to do, and that they will be able to manage with the cash accruals that they have at their disposal. So I think it will be better to wait for their response, and if at all any additional requirement or a refinancing request comes, I'm sure the lenders forum will get to meet and discuss that at that point in time.
All right, we'll touch base with you at that time. Thank you very much, Mr. Swaminathan, for joining us and clarifying about the additional pledges that were announced by the companies over the weekend. So just to wrap up, these loans, thank you. The additional pledges are actually minor. It's just about 0.3% of the total shares of the company, leading to about 1% maximum for the three companies mentioned. For one of them, it's only 0.55. The additional pledges are not huge, and they are not for a new loan. They are to top up an existing loan. Back to you, Surabhi.
Thank you, Lata, very much for that. And I think that's an important clarification to keep in mind. This is not an additional share pledge, which was the confusion, I think, a couple of days ago. These are just covenants of an existing loan that need to be adhered to, and therefore the additional top-up has been made. Thank you for that conversation.
And the company also saying, right, that they were earlier planning to draw down some loans in March, but now they've decided against it, and they're saying that their existing cash flow is going to be sufficient, right?
Yeah.
So that's also fairly important. Get into a break?
Absolutely. Let's do that. We'll come back on the other